Alrighty, so I wanted to do a little video this morning. I'm on a little nature walk at the dog park, and anyway, I'm going to try to film some dogs. I just missed. I was talking to a firefighter that had a little Chihuahua kind of dog, and he said I just missed the height of all the little dogs running around. So maybe I'll give it a try a little bit later. Today's Friday, so maybe there'll be a bunch of dogs out later. But anyway, I wanted to today do maybe a different type of video on cryptocurrencies and Bitcoin specifically. I've just been looking at kind of the patterns and the cycles, and I know there's some people that watch my videos that have cryptocurrencies, so they might benefit from kind of this macro analysis and kind of where we're at in the Bitcoin cycles, and maybe some good opinions on where we're headed going forward, and doing some dollar cost averaging, and maybe a little bit about safeguarding your cryptos and that type of thing. So anyway, let's jump into the chart, and I'll kind of go through that with you. Alrighty, let's get the chart set up here. So this is the Bitcoin chart that I've marked up, and let me get it situated here for you so we can see what's going on. All right, a little bit there, a little bit density there. We want to have the whole chart on here, and even a little bit into the future. There we go. Yeah. All right, that should suffice. So basically what we're looking at here is pretty much the entirety of the Bitcoin life, going all the way back to pretty much the beginning. And so I've marked the chart up, and you can see definite patterns and cycles. So we'll start off with the green vertical lines, which are the halving. So if you don't know, there's plenty of videos on Bitcoin halvings and the cycles that Bitcoin goes through, but essentially there's miners that are the people that run all the computer hardware to process Bitcoin transactions to make sure there's no double spends. So you can't spend your Bitcoin twice, which was the whole key to breaking this code for a new monetary system. So so those green lines are the miners' halvings of their mining rewards. So they're doing all the complicated algorithms to process the Bitcoin transactions, and every 4 years it's built into the code of Bitcoin that their rewards are halved, so it's deflationary. So when those halvings occur, basically there's less available Bitcoin, and over time the total supply is capped at I think it's 21 million Bitcoin, and we're up towards the higher end of having mined all the Bitcoin. So those rewards every 4 years are halved. So when that occurs, it's a supply and demand thing. So you can see on these green lines where they occur, following those points in time, there is a escalation or an increase in the Bitcoin pricing. So it's pretty consistent, that pattern. Then what follows are cycle highs, which are the red vertical lines, and you can see those indicated here. So we've had a few of those, and then I have a projected Bitcoin high in 2025, which we'll talk about. So, but essentially what happens is after these cycle highs, you get a blow off top, so to speak, where everybody that wants to buy Bitcoin has bought Bitcoin. There's no buyers left, and essentially we go into a bear market at that point, and we start our sell-off. And that also is cyclical. And so you can see these sell-offs after the cycle highs. And, they're not exactly the same, but the pattern is there on these cycle highs. So we are at a point, and there's definitely a time frame following these cycle highs where we are at the cycle lows during what they call the crypto winter. And we're at one of those points now, roughly. We're in the right time. We're in the right percentage of sell-off, roughly. And so these are areas where you want to dollar cost average or increase the amounts that you're allocating to your investments in cryptocurrencies, Bitcoin specifically. So other things I've noted here are the cycle lows, which are the purple lines. And then I have a projected cycle low here, which is the teal line, which I have at 12,500 as the cycle low for that. So it may or may not get there. A lot of times when everybody thinks the price is going to go lower, which is the case right now, there's so much fear in the market. There's been so many cryptocurrency establishments, companies just blowing up, like Celsius and Terra Luna and FTX, BlockFi, halted withdrawal. So there's all these lending platforms, third-party companies, and centralized exchanges that have just imploded because they took on too much leverage and debt and various other things that they were doing that were not very good money management. And so ultimately they blow up, the customers suffer and lose millions and billions of dollars. So it's a flush out, and it occurs every cycle until you get to the point where there's no more sellers and you have the halving, and then from there we start our bull run again. So we're at that point now where we are at that point where you want to be putting money into Bitcoin. And that's my opinion. I've been through a few cycles now, and you can see the patterns there. I've also notated, put in trend lines from cycle high to cycle high, these blue lines, and you can see they flatten out over time. So there's diminishing returns in this chart on Bitcoin as far as how much return or increase from bull cycle to bull cycle highs. So one thing I've notated here is as far as just going out into the future, what to expect. So if we're at the cycle lows or near them, from here or within the next few months, we should start to see either trading sideways, maybe another leg down capitulation, but at some point we're going to solidify a bottom and we will continue into the next cycle's uptrend. And so this other blue line, the last one here that I have, is my projection roughly to where the cycle high should meet according to the date of the estimated projected cycle high. So again, this is my technical analysis of what I think is going to occur. And so if you look at where that intersection is, we're at around $125,000 per Bitcoin to 150, I estimate, is where the next cycle high will be. So from here at a $17,000 Bitcoin, potentially down to 12,500, you're looking at like an 8x to 10x of money that you put in at this point in time. So you put 10 grand in at 12,500, and we get up in the next 3 years to $125,000 Bitcoin, you basically turn your 10 grand into 100 grand. So in 3 years, that is not a bad gig. So that's kind of my overview of how I'm viewing the Bitcoin chart and cycles from a macro view at this point. And I'll also point out these dark green arrows in here that that are kind of accumulated. That's based on what I term a perpetual trade system. So it never ends. There's no I bought and then I sold, I'm done. It's an ongoing system where you're just recycling money. So these are the buy points, and the last two cycles I back tested to where the buy points would be, and then these are actual buy points that I'm tracking for this cycle. So I've been buying all the way down as Bitcoin's selling off. So, and then this is my average cost per Bitcoin at this point. So, it's not super great, but if it goes to 125,000, I'm at a 4 or 5x on my money, which I'm totally happy with. So, and then I'm sure as I continue to dollar cost average according to this system, this number will continue to come down. And so I don't have the sell points, but there's sell points associated with the system as well. So that, as we could sell off during this cycle, I will take profits, and then again, that money goes back in larger allocations for this cycle. And then you sell off into this upward trend, and then you just rinse and repeat. So that's kind of my view of how I'm playing the Bitcoin cycles at this point. And what else can we say about this? I think as far as cryptocurrency and safeguarding your cryptocurrency, I think it's worthy of speaking about a little bit. So with all these third-party companies, central exchanges just going down where they lose liquidity and they are over leveraged and they cannot repay customers' funds, you think that your Bitcoin was on an exchange, you allowed them to hold it for you. They have the private keys to that crypto, and they can halt withdrawals, and you're SOL. You're not going to get your money back. So you've trusted a third party to hold your cryptocurrencies, which is basically goes against the whole principle of cryptocurrencies, which is the way they were designed is that you can create your own hardware wallet addresses or mobile wallet and have custody of your cryptocurrencies and hold the private key, which is generated when you initiate a wallet. So you have those private keys, and then you send your cryptocurrencies to the address that's under those private keys, and then you own those cryptocurrencies. Nobody can take them away from you. So that's the whole point of cryptocurrencies, is to self-custody on a cold wallet. So they have hardware wallets like Ledgers, Trezors. There's other companies that manufacture them, but you also want to buy directly from the company so there's not tampering with those devices. Ledgers, I think that's the number one company out there. They're out of France, so you can buy a ledger and then set that up. So when you first set it up, it's going to generate what's called private keys. It's there's words that are generated that you have to write down, and you have to keep those words in order in a safe place. And you don't want to take a picture of them. You don't want to email them to yourself. You don't want to save them on a computer. You don't want them ever to go into the digital electronic world at all. Pen and paper is the best way. I recommend at least 3 copies stored in different places. If you can hammer hammer it into metal, that's even better. There's different things you can buy on Amazon, or there's companies that have like templates where you can stamp your private keys onto, and they can withstand fires and whatnot. So you do not want to lose your private keys, because once you take self-custody of your cryptocurrencies, if you lose your private keys, and you may have heard of stories of such where people die, or they take their private keys to the grave, or they lose them. They had them stored on a computer, and they lost their computer. They're gone forever. You lose your cryptos. So that's, I don't want to say the downside, but it's just, if you're responsible, you can pull it off in like self-custody. So nobody can ever take your cryptos. You can't have a government agency come in and lock your account, because they don't have control of that. You have control of it, and you can even store your private key in your head. And so at that point, there are no copies. So if you feel like you have an excellent memory and can remember your private keys, a lot of times they're 12 words or 24 words. You have choices there that need to be memorized. So anyway, that's a little dive into that. And so I highly recommend getting your cryptocurrencies into self-custody on a hardware wallet once you have some amount of wealth that you deem significant. Because if it's on Coinbase, if it's on a Binance exchange, if it's on whatever, you've trusted another company, a centralized company, to hold your cryptos. You can wake up one morning and they say, we're insolvent, we don't have the funds, and according to our terms of agreement that you agreed to, sorry, you cannot withdraw anything, and we're going to go into bankruptcy. And yeah, it's going to be years before you see your money, if anything. Probably not. So that's the beauty of crypto, is store it yourself, manage it yourself on your own hardware wallet. So they have hardware wallets, which are like the Ledger Trezor. You can have mobile wallets. They have like Coinbase even has a mobile wallet, which is decentralized. You own the private keys to. Exodus is another good wallet. Trust Wallet is from Binance. These are all decentralized mobile apps, and they're one step lesser than a cold wallet, hard wallet that's totally offline. But mobile wallets are pretty darn safe, because they're on your phone, and you have some privacy access, security access to your phone. So they're pretty good, and you have the private keys that you can store from those. So anyway, there's lots of videos online that you can look up and learn about setting up your own private wallet to get your crypto into your custody. So other than that, like I said, now is a great time to start DCAing into Bitcoin, understanding the cycles, learning about hardware wallets, and safeguarding, just because with the backdrop of all these companies that have just wiped out billions of dollars of people's money, it's horrific what's happened. So other than that, I think next year, with the way the economy's going, we're probably going to have a pretty rocky road, is my opinion, with inflation and the quantitative tightening that's going on, the interest rates going higher, inflation being high. We have yet to see unemployment kick in, which is usually a lagging indicator. So that's probably going to start happening next year. Housing prices are coming down, interest rates are going up. So people start losing their jobs. Corporate America starts, not having as much profits. They lay off people. And then those people can't afford their mortgages, and they have variable rate interest rates on their mortgages, which go up, and they can't afford their mortgage. They start foreclosing on homes. And so it's kind of a cycle of its own. And so we've had a quite a ride as far as like easy money, quantitative easing for a decade or more. And so now we're back into that 70s period, high inflation, high interest rates. and it's a whole different animal. So what I've said about the Bitcoin chart is all through the chart, it's had an easy ride in some ways because that was during the period of quantitative easing. So we'll see how Bitcoin, if the cycles hold up going into a potential more of a recession next year. I presume it will hold its own because it is in some ways set up as an alternative monetary system to the paper trash that the Fed produces and tries to control inflation. But I mean, all fiat currencies, paper money, basically go to zero over time, and the US dollar eventually will get there. It basically has like 99% of its lost 99% of its buying power since its inception. So it's on its way down as well. And with high inflation, it's accelerated. So we'll see where it all goes. I don't want to be too doomsday, but Bitcoin's an awesome thing. Cryptos are awesome. You have to be careful and learn, educate yourself. But I will say cryptos can help accelerate one's wealth if you're smart about it and learn. So anyway, that's my little video on cryptos and Bitcoin, and hopefully some of you find this helpful, and we'll talk to you down the road. Alexander Adventures On.